This exercise asks you about the definition of GDP, a measure of total output which we produce in our economy. There are different measures, and today we'll come across three of them. GDP, gross domestic product, GNP, gross national product, and NNI, net national income. They are measured, they're calculated slightly differently. So let's have a look at the difference between GDP and GNP. Now, questions 5 and 6, they are practically the same questions, asking you about the definition of GDP. In other words, how exactly GDP is calculated. If you check on Moodle, actually, there is an extra task for you to do, which is not included in the lecture slides, and it's stated as like homework, additional homework. There is a reading provided, a few pages which you need to read about how to calculate GDP and the differences between GDP and GNP. In other words, gross domestic and gross national product. So let's have a look. Gross domestic product includes current production of final goods and services within a country's borders. Within a country's borders. So whatever was produced in our territory is our GDP, domestic product. While the current production of final goods and services by country's citizens, it's GNP, gross national product. There are some differences in how we calculate this. For example, if you are a foreigner who came from abroad, for example, from China, you're a Chinese student, you come to the UK and you work part-time. Whatever output you produce will contribute towards our GDP, domestic product. A Chinese student, not a resident in the UK, worked something, produced something, and contributed to our domestic product. However, this will not count towards our national product because this Chinese student is not a resident in the UK. He kind of belongs to other country. He is part of labor resources of China. So generally, it will not be counted in our GNP. Instead, it will be calculated as part of Chinese GNP, Chinese national product, even if it was earned abroad. And similarly, if you go, maybe you start working for a company, it sends you to work in New York for a year. Right? Again, when you work in New York, you will contribute towards American GDP, domestic product, because this is the product which you've created within America's borders. It will be part of American domestic product, but it will count towards our British national product. So these are the slight differences. And this particular exercise asks about domestic product. So it will be current production of final goods and services within countries' borders. What is also important, what you also need to pay attention is that it's final goods, not intermediate goods, not exchanges of assets. It's final goods produced. So when you calculate GDP, you avoid double counting. For example, when you produce this desk, you need to produce the steel, you need to produce timber, you need to produce paint, which will all cost some amount of money. And then you produce the desk itself. So what will count towards the GDP? All of this separately or the value of the final product? The value of the final product only, otherwise it will be double counted. And an illustration of this will be this particular question, question 6. It's an application of this idea. Farmer grows wheat and sells it to the miller for £1. Miller turns the wheat into the flour and then sells it to this flour to a baker for 3 quid. The baker uses the flour to make bread and sells it to the engineer for £6. What is GDP? GDP is £6. This is the value of the final product made. All other intermediate goods will not be counted towards GDP. Only the final value of the final product will count. So GDP is £6. However, so this is the final value of final product. Intermediate products do not count towards GDP. However, you can also calculate GDP as a sum of intermediate of value added at each stage. Can also be counted as sum of value added at each stage of the production process. Values added at each stage. So it can be calculated as the value of the final product or as the sum of value added. And in this case, have a look. Farmer has grown wheat. It has grown it from nothing. There was no product before he has created this wheat. And the value of the wheat is 1 pound. So the farmer has created 1 pound worth of value. Then he sold it to the miller. Miller, who purchased the flour, who purchased the wheat at 1 pound, added some value, created a flour out of this wheat, and sold it to a baker for 3 pounds. In other words, the miller has added 2 extra pounds of value. He has actually spent 1 pound, purchased intermediate product for 1 pound, processed it and sold it for 3 quid. So he has created a value, an extra value, additional value equal to 2 pounds. Baker, who has purchased this flour for 3 pounds, turned it into a bread and sold it for 6 pounds. In other words, he has created an additional 3 pounds of value. So purchased 3 pounds worth of resources, turned them into an extra product and sold it for 6 quid. So he has added 3 extra pounds. Engineer didn't add anything, he simply consumed this bread. So the value added by the engineer is 0. So if we add up 1, 2, and 3, we will get the same 6 pounds. So we can calculate a GDP in 2 different ways: as a value of the final products produced in the economy, or as a set of all value added at each stage, but not as a value of intermediate products, because otherwise it will be double counting. So this is the first important thing, and this reading which I've mentioned will develop on this idea. So please make sure that you cover this, because there are some questions in the question bank based on that. Not many, so the chances that you will get this question are not high, but there are some questions. A similar question: firm produces some raw materials, so firm A produces some raw materials for 120 and sells this to firm B. Firm B, which purchases these materials for 120 pounds, transforms them into some semi-finished product which is now worth 160, right? So firm B has added 40 pounds of extra value. They've transformed raw materials into some semi-finished product. Firm C, which purchased this semi-finished product, for example, they've purchased legs and worktops. Now they've produced the actual final desk, which is now worth 300 minus 160 which they've spent, which means that they've generated 140 pounds extra value. So semi-finished product was worth 160 and finished product is now worth 300. They've added 140 pounds. They've sold this desk to a wholesaler. Maybe these desks were produced somewhere in Poland or in Finland or in China, and wholesaler manages logistics of delivery, transportation of all these ready-made desks to the UK. So they provide storage solutions, distribution, warehousing, and so on. And they sell their desks to a retailer at 350 because they add their own profit on top. They charge for their services. So they've purchased the desks from the manufacturer for 300 pounds and they sold them at 350. So they've added 50 pounds worth of services to our total output, and they sold these desks to a retailer, furniture shop. And the retailer who purchased them at 350 added their own markup of 25 pounds. So they sold them to a consumer at 375. They've added a markup of 25 pounds. Again, because they need to cover the costs of running a shop, their own overheads, pay their staff, and so on. So they've charged 25 pounds markup. They've provided us with additional services. For example, a nice shop where we can come and compare different types of desks to choose from. And consumer obviously buys this product from a retailer for 375 pounds. This is the final value of the product made. And now let's add up all these value added or at individual stages. Sum of value added at each production stage. 120 plus 40 plus 140. So this will be 300 plus 50 plus 25, 375 pounds. This is the sum of value added at each stage, and as you can see here, it will be equal to the value of the final product, value of final good, and this is sum of value added. They're the same numbers, so you can calculate this using different methods. As accountants, you are not likely to come across frequently across these tasks. This is not what you will need to do in your professional life, but you just need to be aware of different methods of calculating GDP.